So hello, what's up? Welcome everyone to this revision session of SA 800. This revision session, we are going to cover all the concepts of SA 800 along with the amendments of SA 800. Not only that, whatever are the questions in your question bank, that also will be revising with this revision. Sir, from where can we get these board notes? So these board notes are available on our Telegram channel, Clear CA with Shubham Keswani. You will find the link in the description. So without much ado, let's begin with this revision. I request all of you to please like this video so that it can reach more students and yes, it can benefit them all. So let's begin with this revision. It talks about SA 800. Now sir, SA 800 ka series talks about what? It talks about special consideration. Special consideration in an audit of financial statement prepared as per special purpose framework. Sir, special purpose framework. So please understand. The financial reporting framework are of two types, general purpose framework and special purpose framework. If I talk about general purpose framework, it is for generally everyone. It is for generally everyone, yani the financial reporting framework to meet the financial information needs of wide range of users. That is everyone. But when your financial statements are prepared to meet the financial information needs of some specific users, then in that case you call it special purpose framework. Now sir, what can be the examples of special purpose framework? So just hold on, I will discuss that. So it says this FRF, that is the financial reporting framework, it can be fair presentation or compliance. Now coming to the examples of special purpose framework, that means financial statements for some specific users. So first of all, let's talk about creditors. So creditors are interested in your cash flow position. So generally you prepare the financial statements on accrual basis, but especially for creditors, you will follow cash basis of accounting. And creditors are interested in your cash flow information. Got it, sir. Similarly, even a regulator can establish the financial reporting provisions for preparing the financial statement. So for listed companies, the regulator is SEBI. Now, your financial reporting provisions can be based on a contract. Now, sir, what type of contract? In which you have taken some money from some person. It can be a loan agreement, it can be a project grant, or it can be a bond indenture. Indenture is just another name of contract. So you just need to remember three types of cases: creditor, regulator, contractor. Say with me: creditor, regulator, contractor. In case of creditor, cash basis of accounting, cash flow information. Regulator, financial reporting provisions established by regulator. And contract, in that case, financial reporting provisions of the contract. So I call them very easily CRC. Say with me: CRC. Creditor, regulator, and contractor. Understood the concept? Yes, sir. Now I have divided the SA 800 series in three parts: accepting the audit, planning and performing the audit, and then reporting. Let's understand each part properly. Okay, sir. So first of all, now talking about accepting the audit. Here the main focus of accepting the audit is focusing on the special purpose framework. Whether the special purpose framework is acceptable or not. Now you people tell me, how will you determine if the special purpose framework is acceptable? Sir, if it is meeting the financial information needs of specific users, then it will be acceptable. Then in that case it will be acceptable. So before checking the acceptability, let's see what are the options available. These options are called applicable FRF. So it says the FRF can be established by an authorized or recognized organization like ICI, Ministry of Corporate Affairs, which provide us with the standards. Or law or regulation can prescribe the financial reporting framework for special purpose financial statement for certain types of entities. For example, requirements of regulator. So in case of listed entities, SEBI says what should be the FRF. So FRF can be provided by an organization or law regulation. Then it says if there is any conflict between financial reporting standards and the requirements of the regulator, then you have to follow the actions of SA 210. Sir, what are the actions of SA 210? That is not applicable for you. You just need to know that you have to follow the actions of SA 210. Got it, sir? Once you know the applicable FRF options, then you decide the acceptability. For acceptability, they say consider the attributes of SA 210. Now, sir, what were the attributes of SA 210? Let's revise. So everyone, please come to your notes of SA 210. Yes, sir, we are here. In SA 210, if you come at the last part, we discuss the factors which are relevant to determining the acceptability of FRF. Now, sir, what were the factors? First of all, nature of the entity, whether it is a business entity or a non-for-profit organization. Business entities make P&L and balance sheet. NPOs make receipts and payment account, income expenditure account, so different FRF. Then you consider the purpose of financial statement. Common financial information needs, that is general purpose financial statement. Specific users, that means special purpose financial statement. Then you need to consider the nature of the financial statement. It is a complete set or single. Complete set means P&L, balance sheet, cash flow, notes to accounts. Single financial statement means a single financial statement like P&L account, like cash flow account. That's it. Then consider the requirement of law regulation. So we all know Companies Act 2013 says that if there is any company, how does it make the financial statement? As per the AS and as per the Ind AS. So these are certain factors which you can consider to decide whether the FRF is acceptable or not. So this is a quick summary I have given here. Let's revise it again from here. Revision in the revision. So first of all, you consider the nature of the entity, nature of the financial statement, profit making, NPO, complete set, single financial statement. Then you consider the purpose, general users, specific users, and requirement of the law regulation. So this part, even if you just read it, it is enough. Got it? Got it, sir. Now comes a special case. Everyone, please focus here. In this special case, what is happening? There is a sale of entity happening. Now, sir, whenever a sale of entity happens, you have to value the net assets. Sir, we all have learnt in FR, for calculating the purchase consideration, net assets means assets minus liabilities. So what can happen? That the seller and the buyer, they can enter into a contract. And in that contract, it is clearly written that the seller's financial statements, whatever are the debtors which are overdue for more than 90 days, on that 100% provision has to be created. That means we are assuming we are not going to recover them. So do you think it is neutral? Answer is no. This is a very prudent provision. This is a very prudent provision. So this is what is written. This provision is not neutral compared with the financial information in general purpose framework. So now if you come to your book, let's have a quick revision from the book. So we are focusing on SA 800 financial statements audit prepared as per special purpose framework. We'll call it SPF. SPF is a FRF designed to meet the financial information needs of specific users. Now, what are the examples of specific users? CRC, creditor, regulator, and contractor. This thing we have already covered. Now focusing on the considerations when accepting the audit. First of all, determine the acceptability of FRF. How to determine? Consider the needs of intended user. First of all, what are the options available? Prepared by the organization like ICI or prescribed by law regulation. If you feel there are any conflicts, take actions as per SA 210. Got it? Got it, sir. Now for determining the acceptability, consider the attributes of SA 210 that we just revised. Now this example I have already covered. For valuing the net assets on the date of sale, vendor and purchaser can agree on very prudent estimates for provision for doubtful debts. So this is not neutral as compared to general purpose framework. So what is given here? You just need to read it. The main thing that you need to focus from exam point of view is these three examples can become a part of your question. Got it? Got it, sir. Now everyone come to the next part. Now focusing on the next part, everyone, please take 2 sips of water. Ready? Ready. Now coming to the next part, planning and performing the audit. In this, you first of all, let's revise the basics. As per standards on auditing, all the standards which are applicable to the entity, they should be complied with. You should follow all the standards which are applicable. Got it, sir? If a standard is not applicable, let's say SA 610, there is no internal auditor, so SA 610 not applicable. Don't need to follow it. Then you need to follow all the relevant requirements. If you feel you cannot follow a relevant requirement, you cannot follow a particular procedure, you will perform alternate audit procedure. Deal done? Done, sir. Then it says there are certain examples of essays which require special consideration. This is very important from exam point of view because there are certain amendments in this case. Please understand carefully. First of all, essay 320 and 315. 320 talks about what? It talks about materiality. So normally, what do you mean by material misstatement? Please tell me. Let's revise it. What do you mean by material misstatement? Sir, material misstatement is a misstatement that can influence economic decision of the user of financial statement. Come on, which can influence the economic decisions of the user of financial statement. That means if there is a material misstatement, I will not invest in the company. I will not put my money into the company. Yes or no? Yes, sir. When the auditor is calculating the materiality, he has to consider financial information needs of the users. Sir, which user? Mr. Bablu, Mr. Taplu, Mr. Chimpu. Which user? Sir, general users. You have to calculate the materiality considering the common financial information needs of the users. But when I am doing my audit as per special purpose framework, in the audit of special purpose financial statement, I have to consider financial information needs of intended users. So this is a special thing about this. So normally judgment about materiality is based on the common financial information needs of all the users. But when you are doing the audit of special purpose financial statement, consider the financial information needs of intended users. Understood? Understood, sir. Now comes a special case of contract. I told you there are three cases of special purpose framework: CRC, TER, creditor, regulator, contractor. Now let's say we discussed in essay 315. Sir, what did we discuss in 315? That as an auditor, you need to understand the accounting policies. Sir, did we discuss it? Just wait a minute. Let's see. Quickly open the notes of essay 315. Yes, sir, we have opened. Now come to this topic where we discuss that auditor will obtain an understanding of the following. These points we covered. So I told you whenever we go to buy the clothes, we consider the fabric. We take an understanding of the fabric. So when you are auditing the entity, you will understand the Fabrin. Fabrin means F for financial performance, A for accounting policy, B for business risk, RI for relevant industry, regulatory and other external factors, and N for nature of the entity. So definitely you need to understand the accounting policies, whether they are appropriate, and if there are any changes, what are the reasons for changes. This is the same thing that I am discussing here. This is the same thing I am discussing here. That essay 315 requires you to understand accounting policy. Now, sir, when you are auditing the financial statements as per the contract, when you are auditing the financial statements as per the contract, when you are preparing the financial statements as per the contract, now accounting policy will become what? So in this case, if the financial statements are prepared as per contract, now you don't need to understand the accounting policy. You need to understand significant interpretations. Now, instead of accounting policy, you need to understand significant interpretations of contract. Now, sir, when is the interpretation significant? So, interpretation is significant when adoption of another reasonable interpretation will lead to material difference in the financial statement. Let's understand with the example. There is an amendment here. Please focus. Okay, sir. Let's say there are two entities, Reliance and L&T Constructions. Reliance gave a contract of construction to L&T for 50 crore rupees. Got it, sir. In turn, Reliance asked L&T to submit the financial statements. Now, sir, in the contract, it was clearly written that whatever will be the revenue recognition, it will be based on percentage of completion method. Percentage of completion method means when 60% construction completed, then 50 crore ka 60% can be recognized as revenue. Second thing that was written in the contract was Reliance can anytime terminate the contract. If Reliance is not happy with the L&T ka services, it can terminate the contract. Now, can I say two interpretations are possible? What? Revenue recognition can be on POCM method, percentage of completion method. Yes, sir. Or because Reliance can anytime terminate the contract, don't recognize the revenue. Don't recognize the revenue until the contract is complete. So revenue recognition should be on completion of contract. So let's say management adopted this interpretation. Management adopted this interpretation. So this is a significant interpretation of contract. Why, sir? Because if management did not adopt this and they would have gone ahead with this, there would be a material impact to the financial statement. There would be a material difference in the financial statement. How, sir? If I am adopting percentage of completion method, I will be recognizing the revenue in my first year, in my second year, in my third year, in my fourth year, and let's say the project gets completed in the fifth year. So for 5 years, I will recognize the revenue. But if I adopt this method that I have to recognize the revenue on contract completion, no revenue recognized in first year, second year, third year, fourth year, no revenue. The whole revenue will be recognized in the fifth year. So don't you think if I ignore this interpretation and adopt this one, it will lead to material difference in financial statement? Yes, sir. So that's why this is a significant interpretation. That's why this is a significant interpretation of contract. So this is what I was trying to teach you, that as per 315, you need to understand accounting policy. But because now the financial statements are prepared as per contract, you need to understand significant interpretation of contract. What is a significant interpretation? If another interpretation was adopted, it will lead to material difference in financial statement. You got the concept or not? Yes, sir. Now comes the second part. Now, sir, what is the second part of this game? See the second part of the contract. Here it is written that whatever accounts will be submitted by the L&T to Reliance, Reliance is required to submit the accounts to L&T is required to submit the accounts to Reliance. Okay, sir. And they have written it in the contract that any mistake below 20 lakh rupees will not be corrected. So if in the accounts there is any mistake below 20 lakh, it will not be corrected. Got it, sir? So auditor is still required to calculate materiality? Answer is yes. Auditor is still required to calculate the materiality as per SA 320. Auditor cannot say no, 20 lakh is the materiality. No. You have to still calculate your materiality as per SA 320, because when we studied SA 320, there was nowhere written that you can calculate the materiality based on contract. Okay? So for that, you still need to calculate your materiality as per SA 320. So this is the same written here. If the special purpose financial statements prepared as per contract, management can agree a threshold, that is the amount, below which misstatements will not be corrected. So as an auditor, do we still need to calculate materiality? Yes. Still the auditor has to decide the materiality as per SA 320. So let's have a quick revision of what we discussed till now in SA 320 or 315. 320 talks about materiality, considering the common financial information needs of the user. But because it is a special purpose framework, so you need to consider the information needs of specific users. Now comes a special case of contract, that as per SA 315, I need to understand accounting policy. But because the financial statements are prepared as per contract, I will understand significant interpretation. Significant interpretations of the contract. What is a significant interpretation? A interpretation is significant that if you adopt another reasonable interpretation, then it will lead to material difference in the financial statement. Case number 1. Case number 2. If both the entities agree on a threshold below which misstatements will not be corrected, then in that case, Baba, you still need to determine materiality. Clear? Clear, sir. Now comes the next case of SA 260. Sir, what does SA 260 talks about? Communication with TCWG. This is something that you already know. That as per SA 260, you need to identify who are the persons with whom you need to communicate. So identify the appropriate persons in the governance structure to communicate. Now, what was the work of TCWG? Oversight of financial reporting process. Acha, tell me one thing. In case of general purpose financial statement and special purpose financial statements, can I say the financial reporting process is different? The financial reporting process is different. Yes or no? Yes, sir. For general purpose and special purpose, the financial reporting process is different. So when the financial reporting process is different, the people who are keeping the oversight, can I say they will also be different? Yes, sir, they will also be different. So this is the same point written here, that those responsible for the oversight of SPFS may be different from the general purpose financial statement. And SA 700 talks about a very simple thing, forming an opinion and reporting on the financial statement. Now, what are the specialties of audit report that we will cover just now? Let's just revise whatever we covered till now from the book. Revision in revision. So everyone, please come to the book. Let's revise it from the book. What's given? Considerations when planning and performing the audit. First of all, SA 200 says that the auditor will comply with all the ethical requirement of independence. Ethical requirement means that should be in every professional, koi professional, confidentiality, objectivity, integrity, professional competence, due care, and professional behavior. Easy? Easy, sir. Plus, you need to comply with all the essays relevant to audit. So if no internal auditor, SA 610 not applicable. Comply with each requirement unless it is not relevant. For example, SA 501 says if inventory is material, attend the inventory count. So if it is not material, don't attend the inventory count. Got it, sir? In exceptional circumstances, you can depart from the relevant requirement. So you perform alternate procedure. So if you are not able to get the confirmation from debtor or creditor, you perform alternate procedures as per SA 505. So these are the basics that you just need to read. Now talking about the main part, which is very important from exam point of view. Application of some essays which require special consideration. Example essay 320. You need to judge the materiality based on consideration of common financial information needs. Because it is a SPFS, you consider the information needs of intended user. Now 315 says you understand the accounting policy, but because it is a contract, you understand the significant interpretations of contract. Interpretation is significant when adoption of another reasonable interpretation will lead to material difference in the financial statement. Second part of this specialty. Second part says that in the contract, management can agree with the intended user that there is a threshold below which misstatements will not be corrected. So it does not relieve the auditor from deciding the materiality as per 320. What was special about SA 260? That TCWG of the GPFS can be different from SPFS, and SA 700 talks about forming an opinion and reporting on financial statements. Easy peasy, sir. Another water break. Take 2 sips of water and get ready. You are enjoying or not? Arey Baba, you are enjoying or not? Yes, sir, we are enjoying. Just go with me conceptually. You will love audit. Chalo, let's begin. Let's begin. What are the special points of audit report? Please focus here. See, in the audit report, the first thing that you have to check as an auditor is that whether the financial statements adequately describe the applicable FRF. But now the FRF is contract. So if the financial statements are prepared as per contract, they should describe significant interpretations of contract. What was the significant interpretation? That if you adopt any other interpretation, it will lead to a material difference in the financial statement. They should also describe 3 things. It is a special purpose financial statement. Yes, sir. So the purpose. It is for specific users. So the intended users. And there should be a note on this aspect in the special purpose financial statement. So audit report will describe 3 things: purpose, the intended users, and a note in SPFS which contains this information. If the management has a choice of FRFs, so in the audit report, there is a management responsibility section. So that will also refer to the responsibility of determining the applicable FRF. Now, if you are communicating the CAM in the audit report, then in SA 701 also applicable. Got it, sir. Now talking about SA 720. See, SA 720 talks about what? Annual report. It used to say that if there is any document which contains the financial statements, and the audit report, that is considered to be annual report. So it says if there is a report which contains the special purpose financial statement to provide owners or others with the information related to SPFS, that will be considered to be annual report as per SA 720. Just a quick revision of SA 720. Are you required to audit the annual report? No, sir. We are just required to read it. We are just required to read the annual report to see if in the annual report and financial statement, there should not be any material inconsistency. That's it. So that essay will be applicable to any document which contains your financial statements. Got it, sir. Now, sir, coming to the next and the most important part from MCQ point of view or case study point of view. Let's say your audit report on general purpose financial statement, it has a MURG section. Sir, MURG section means material uncertainty related to going concern. When is this section added? Whenever there is a material uncertainty related to going concern in the financial statements of the entity, auditor adds a MURG section to draw the attention of the users to the note of the financial statement where the disclosures of material uncertainty are given. Got it? Got it, sir. Now, in my audit report of special purpose financial statement, I want to refer this matter. In the audit report of special purpose financial statement. So which para should I add? Other matter para or emphasis of matter para? Sir, emphasis of matter para is added when you want to draw the attention to the note in the financial statement. But you want to draw the attention to the audit report. So whenever you want to refer to something which is related to audit, auditor's responsibility or audit report, then you add other matter para. So in the other matter para in the audit report of SPFS, you will say there is a Murg para in the audit report of GPFS. This is an amendment. Please do it properly. Got it, sir? Now, sir, one more thing. Now, one more thing. What, sir? Tell me one thing. Let's say the company's special purpose financial statement. The company's special purpose financial statements are available on its website. Got it, sir? So can it happen that I can go to the website and I refer the special purpose financial statement and I'm like, how they have prepared it? How they have prepared it? Why they have not prepared it as per the accounting standards? Why they have prepared it in a different way? I can question it. I can question it. I can question the special purpose financial statement. Yes or no? Yes, sir. So that's why for people like me, that's why for common people like me, it is important for the auditor to alert me. For the auditor to alert me that these financial statements are prepared as per special purpose framework, and that's why they are not relevant for me. That's why they are not relevant for me. So this is the introduction to the topic. So please understand. Special purpose financial statement can be used for other purpose. Many other people can refer them. For example, when can they be used for other purpose? Let's say SEBI, the regulator, require the entities to place the special purpose financial statement on public record. Let's say on the website of the company. So anyone can come to the website and see these financial statement. So to avoid the misunderstanding that common users don't refer them, to avoid the misunderstanding, it is important to alert the users using a emphasis of matter para. Sir, why EOM para? Because on this, the financial statement will also have a disclosure that these financial statements are as per special purpose framework. You're getting the point or not? Yes, sir. So we will alert the users using a EOM para that financial statements are prepared as per special purpose. Because special purpose, so not suitable for any other purpose. Understood? Yes, sir. Not only this, tell them that because they are as per special purpose framework, they are for specific users. Because they are prepared using special purpose framework, they are only for specific users. So they should not be distributed or used by other parties. So other parties like me should stay away from them. I should not use them. You understood the point or not? Yes, sir. So last quick revision of this topic, then I will take it from the book. Users need to be alert that financial statements are prepared as per special purpose framework. Why, sir? Why they need to be alert? Because these financial statements are available in open. Special purpose financial statement can be used for other purpose. Example, regulator require the entities to place them on public record. So to avoid any misunderstanding, alert the users. Which para? EOM para. Please remember, EOM para, stating that they are prepared as per special purpose framework, so not suitable for any other purpose. Special purpose framework for whom? For specific users. So not distributed, not used by any other user. Easy peasy. Come on, easy peasy. Yes, sir. So I think everything till here is complete. Yes, sir. Now you can come to the book. Description of applicable FRF. I think every point we have covered here very properly. Yes, sir. This is the same part given here. Please focus here. This part you can do a self-read. This part you can do a self-read. All the points I have properly covered. Got it, sir. Alerting the users. Alerting the users that financial statements are prepared as per special purpose framework. Why? Because they may be used for other purpose. Why they can be used for other purpose? Because regulator requires them to be kept on public record. So to avoid any misunderstanding, alert the users that using a EOM para that they are prepared as per special purpose framework, so not suitable for any other purpose. For this, you will add a separate section of emphasis of matter. How this section is added? So basically 4 things will be added in this. Please remember these 4 things. First of all, the heading will come emphasis of matter, which talks about the basis of accounting, yani special purpose framework. Plus it will also talk about restriction on distribution and use. That means it is for specific users, not for others. So the first thing that you need to write here is we draw the attention to note X of the financial statement, which describes the basis of accounting. Got it. Then, sir, basis of accounting means special purpose framework. So the second thing that you refer is financial statements are prepared as per financial reporting provisions of contract. That is special purpose framework. So not suitable for any other purpose. Second point done. Third thing, because it is special purpose framework, so it is only for specific users like company and the other company. So not should be distributed or used by any other party. And fourth thing in the other emphasis of matter para is our opinion is not modified. This is something we have already covered in essay 706. Done. 4 things. Draw the attention, special purpose framework, only for selected users, and our opinion is not modified. This restriction on distribution and use is the same thing which is given, that in addition to alert, say it is solely for specific users, so it should not be distributed or used by other users. Got it? Got it, sir. Now let's do some questions. Now let's do two questions. First of all, CA Lalita. Lalita is the auditor of a company. She is also offered professional work of an audit of financial statement prepared as per loan agreement. Can I say loan agreement is like a contract? CRC, ter. Creditor, regulator, contractor. So which essay applicable? Essay 800. She chooses to accept this work as and made the mind to disclose this fact in emphasis of matter para. So is it right? Answer is yes. Her approach is proper. Question number 2, it is a good question. Please mark it important from exam point of view. CA Lakshmi has prepared the draft audit report for the financial statement of X Limited, prepared using the financial reporting provisions of contract. CRC, ter. Creditor, regulator, contractor. Again, it is a special purpose framework. She wants to give an unmodified opinion and draw the attention to note A. So whenever you want to draw the attention, you use which para? Emphasis of matter para, which describes the basis of accounting. How should she report this so that it is not misused? Not misused means you have to mention this is only for specific users, not to be distributed, not to be used by others. So draft the suitable para. So this is the only para that you need to draft. So 4 points will come in this para. Let's identify the 4 points. First of all, draw the attention. Second point, special purpose framework. That means comply with the financial reporting provisions of the contract. Third point, intended for specific users. Who are the specific users in the question? X Limited and Y Limited. So intended solely for X Limited and Y Limited, and therefore should not be distributed or used by other parties. You can add fourth point also, that our opinion is not modified. Our opinion is not modified. So here your essay 800. Here your essay 800 full revision along with the concepts and question is done. Clear, boss? Clear, sir. So if you have not liked the video till now, please like it. Do let me know in the comments how was it, so that it motivates me to bring more such useful, amazing revisionary videos for all of you. If you have not subscribed the channel, do subscribe it for more such videos. See you all in the next one. Till then, keep studying with happiness, because when you study with happiness, then only you progress. Keep going, all of you.